jumping into the content, let's talk about GSX. As you know, Apollo FinTech team, those guys behind this crypto project are adding gold assets, mines, and they are growing like crazy, guys. Just recently, the value of GSX just doubled just because news of a new Zimbabwe mine getting added to the asset. So you can get your hands on GSX on the Bitmart crypto exchange, or just go with the link into the description and pay by credit card. Get your hands on GSX. All right, welcome to another live stream here, guys. And today came the inflation data, and it wasn't good at all. Okay, it wasn't good at all. I will tell you exactly why and what's going on and what we are looking into it. I want to first open the news so I can show it to you. We had the biggest surge of inflation year over year since 1982. Okay. And first, you know, you have to imagine like, okay, was this not expected? Of course, we had like a high inflation expected, but this kind of assurance of this high inflation triggers some economics, and then we having market sell-offs. Okay, so it's not an easy environment. I told you many times, guys, the 10-year and the 2 years are year bonds are to follow, and we will dive into that as well, because the 10-year bond just went above 2%, which is not good, specifically for tech stocks. And let's dive in. So you can see here the S&P 500. First, the direction was a little bit overdone. Okay, in the very beginning, the market opened like minus 1%, recovered then. Let me just go here. This recovered then, and then again sold off towards now. And you can see also that here the 10-year bond, for example, rose above 2%. Okay, if you consider this on a bigger scale, we have to go up to, where was that? To July of 2019. Okay, where this happened, and we actually had a nice ride here for also during the corona pandemic, and then picking up now, and now above 2, which is not good, because there's the spread between the 10-year bond and the 2 years bond, which is very important, because if we have an inverted yield curve, then we will see most probably recession. Okay, it was for many times in the history of the financial markets always a sign of recession. Okay, so that's why everybody's scared. Okay, but what's now good coming up? Let's talk about that first. Okay, so here we go. We are still in the earnings season, as you know. Next week we have a couple of big companies that some of you might also following. By the way, smash your keyboard and let me know where you are watching from in the live chat, as well as in the comments if you're watching this later on. You are having here some earnings still coming up in the next week that are interesting. For example, Airbnb will deliver those numbers. Expected are 100 and this is the market cap. So okay, no, this would be crazy in terms of revenue. But here you can see the Fed is having their next meeting on 16th of March, and here will be a very important day for many people out there to see, okay, what will happen with price policy out there, right? So we have also Marriott is letting us know what they are doing. Roblox is also doing something, right? Next week. Let's go further a little bit. Then Wednesday we have Nvidia, Cisco, Shopify, AIG. Lots and lots of earnings still next week. Then we have Walmart, Nestle, Commerzbank, Airbus. Those big guys will let us know their numbers on Thursday. And then next Friday, let's have a look which big companies are delivering their Deere and company. Yeah, DraftKings may be interesting for some of people. Okay, so as you can see, the earnings season is still going on. But what I want to show you guys, I want to show you something else. I want to show you today the situation on the markets. We have quite a liquidity crisis as well, okay? The S&P 500 or the mini, which is basically the future markets, are drying up on the volume that they are traded. As you can see here, back in April, you are having a very, very similar liquidity like here. And this gives us what we saw last week. This big moves, after earnings, pre-earnings, and so on, was pretty hard. And this is when the market is very, very unliquid and there's a move in either direction, then the market moves big into one of the direction. Okay, so this is to understand. And guys, then, I want to give you a little bit of education here as well. You have a couple of cycles, okay? You have the accumulation phase, you have the markup phase, you have the distribution phase, and you have the markdown phase, okay? So here's an example how this all looks like, which is, can I enlarge that? For sure I can. Here you can see, for example, this is a accumulation phase, okay? This is something where people are buying a lot of stock, okay? Because it's just after the dot-com bubble, you can buy for very, very less. You buy your very long-term hold positions, your long-term bull positions, and then you have a multi-year, that's kind of markup, means build up of your wealth, obviously. And then at some point is the distribution, which is like, okay, the top here. I think we are currently somewhere here. You see, like, we're still going a little bit down, then we're going up, then we're going down, then we're going a little bit up, then we're going down. So it's something similar that we see right now. And then we will have a markdown. Could be many years, could be just, a couple of months. It depends always on what's causing this markdown as well. Now it could be the overall asset bubble that we created and need to cool down. And with the problem that we have high inflation and we have inflated asset bubbles, and the Fed need to make a decision. Okay, we cannot keep this ongoing because this will be a totally disaster if so. So we slightly change the condition favorable, not so good for bulls anymore, and that's why we have this turn. But it's a big ship, and it takes a lot of time to change. And this is what happened every now and then. This is like the 60-year cycles, right? You have like here the negative phase, you have the positive phase, then you have a negative phase, you have the positive phase. This is like cycles, okay? So we had the negative phase, now we had the positive phase, and now slowly at some point we are going back to a negative phase, okay? And this is just how every a couple of years, every 60 years, this happens, okay? So as you can see, if you are taking 1966 and adding 60 years, then you know where we are. So this is in terms of educational. And guys, again, I think that the stock market will go up another month or two. But then we have the Fed, we have more information what the Fed will do, how the market react, and so on and so forth. So best regards to California, to Czech, to Ohio, to USA, Chicago, to Denmark, our member Jesper Hansen, as also Luis from UK and Malaysia as well is in the house. So thank you very much, and take care, and don't forget to smash that like button on the end of this video.